I want to bring in Andy Baer. He's head of product and research at CoinDesk Indices for more. Andy, welcome.
Good morning.
Yes, we got the 21 signage right behind us, ticker symbol XXI here at the New York Stock Exchange. What does this listing symbolize?
First of all, it's one of many great NYSE listings in digital assets this year. I was on the floor for the Circle listing earlier this year. Of course, our parent company, Bullish, listed on August 13th, and that was quite a celebration. We also saw some really interesting ETF launches, including GDLC, the first multi-token sort of index ETF here in the fall. So it's been a really consistent pull of New York Stock Exchange listing top digital asset companies, and now having the number 2 largest and the largest on NYSE listed digital asset treasury, it's a great day.
How would you describe the work that 21 Capital does?
Well, the best thing is you get what's right on the tin, right? It says, you know, a Bitcoin company. 21 refers to 21 million Bitcoin, which is the ultimate limit of the number of Bitcoin which will ever be minted. And basically the idea is, look, you can go, there's a dozen ways to buy Bitcoin, but if you want Bitcoin managed with professional, financial skill, including lending, including yield, including treasury management, digital asset treasuries can do that. So we are a believer that highly skilled executives can help squeeze more value out of Bitcoin, which, you know, left to its own devices isn't interesting, but it's a pretty inert device.
Certainly we've seen Bitcoin, it's a risk-on asset, right? And so it has seen choppier trade amid some of the volatility of late. Does that mean anything for the future of Bitcoin?
Well, first of all, anybody who is interested in a Bitcoin digital asset treasury has to first be interested in Bitcoin. So you wouldn't want to even start to investigate any of these digital asset treasuries in Bitcoin or other digital assets unless you're interested in the underlying asset or assets. Crypto has had kind of a heartbreak Q4, right? After a lot of big progress and a lot of interesting developments in the first 3 quarters, record high of Bitcoin back in, not that long ago in early October. But it's been kind of a heartbreak Q4. There's been a drawdown of between 20 and 30% in different digital assets. And it looks like 2025 might not post positive returns for digital assets, which would kind of be a surprise and a disappointment. Others would see it as a buying opportunity.
And certainly we know that we do have some cryptocurrency digital asset bulls who have come on this show before. Andy, what kind of opportunities does a deal like this unlock for 21 going forward?
Yeah, I think it's fantastic. I think, you know, the approach that 21 is taking, which is, look, we're not going to have an operating company that has nothing to do with Bitcoin. We're going to focus on increasing your Bitcoin per share, right? They want each shareholder to feel as if that share is going to accumulate a little bit more entitlement to a little bit more Bitcoin every year, almost like a company that reinvests its dividends back into itself, and you sort of get almost like a buyback, right? So you want to have this feeling that you have exposure to Bitcoin, you have exposure to the power and the energy of the company, but also to this financial engineering, which can actually create some Bitcoin denominated yield back into the share price. So it's a very valid proposition, and with good skill, it's achievable.
What else are you following in this space, Andy, at CoinDesk Indices?
Well, we love the entire digital asset space. Right now, I think it's very important to watch Ether. It's very important to watch our indices, the CoinDesk 20, which has several ETF filings in place right now to look at the broad market. But Ether's been very interesting. We don't think that there can be a broad digital asset market rally without participation or leadership from Ether. It went through a big upgrade last week, which was successful. It captures or kind of executes more than half of all that stablecoin and tokenization volume. So it really is at the core of a lot of what the growthier side of crypto is doing with legislation, with integration, with stablecoins, with tokenization. So keep an eye on Ether, keep an eye on its stablemate Solana as the other big layer 1. And as you see more regulatory support, as you see more adoption, integration, and yeah, you need a little bit of fast money support too. We see that the next rally should be a powerful one, and we think it can be as broad as Q2 and Q3's rally this year.
How well known is 21 Capital CEO Jack Mallers in this space?
A lot better known than any of us were in this space a couple of years ago. So I think the nice thing is that the company is forward. You have certainly some good brand names in there, good connectivity. Having the Cantor name participating in the SPAC is, of course, gives good brand recognition. A lot of this is proof is in the pudding, right? Is this financial engineering skill, CFO level skill or treasury skill going to work? People are desperate for a way to make their Bitcoin go to work for them, and that's a little difficult given how young the market is. So if this company can find ways to do it in the capital markets, borrowing, lending, option writing, other forms of yield gathering, or smart treasury management about activities around the company's NAV levels, it can be a tremendous success, and we think that it will be an interesting sort of active alternative to holding either Bitcoin or Bitcoin ETFs.
Andy Baer, Head of Product and Research at CoinDesk Indices. Andy, thanks for joining.
Thanks, Kristen. Good to see you.
Yeah, great to see you. Big day here at the New York Stock Exchange.